Hi folks, Lee Gettess here with the Market Sense for the week of January 14th of 2014. The charts I stare at all day long come from the Trade Navigator software. The first chart we'll look at is a weekly bond market chart here, and you can see last week, largely in reaction to the employment report on Friday, bonds rallied very nice and strong and took out their resistance. The report was stronger than expected, but that was a little bit misleading, and I think bonds realize now that all of this tapering fear that they priced in way back here may be a bit overdone, and it wouldn't surprise me if we get a little rally. But for now, they tried to go up to the 131.16 resistance here, which is that little blue line we're looking at there, and they haven't quite made that. Of course, they haven't made it down to support either. That's around 130.12, and they're just sort of biding their time consolidating this move, but consolidating at higher prices. And, looking at the pattern, if they broke down to the middle moving average here at 129.06, that still would look pretty good. And even down here, they'd have to break 128 before they show any weakness at all. So I think they kind of look good. They don't have to go straight up, but I'm kind of looking for them to move higher here. And 131.16 is the first target we're looking at. Now, when we move to stocks, I want to show you a monthly S&P chart. And the reason I want to show you this is not only so that you can see the trend for the last couple of years, looks like an escalator, but I wanted you to see so far this year where the back off has come to. This is the upper moving average. They continue to close above everything for the last few months, and when they do that, if the trend is going to continue, you expect them to hold the support at the upper moving average. Well, that upper moving average is around 1806, and as you can see, they're holding above that on a monthly chart. Now, I want you to keep that image in your mind when we go look at the weekly chart. The weekly chart broke down through all kinds of stuff. The lowest support we're looking at here is 1818, and they clearly got well below that. But remember that monthly chart. They really haven't broken anything significant in the big picture, and that's why it's always helpful to look at a time frame beyond whatever it is you're trying to analyze or trade. So they went down to 1818. This middle moving average here is around, what is that, 1831? They broke all that, and they've already come back up and recovered it just in a couple of days here. That doesn't mean they'll necessarily continue back up, but I kind of think they might. The initial resistance we should find here is above 1840. That's about 1843 at the upper moving average. The previous high is a little over 1846. I'd really be a little surprised if they don't make new highs. Maybe not this week, but soon I would expect them to be at new highs. Now, they may fail once they get up there, and of course they might test it and fail. Either one could be a real negative indication. But at this point, I think you have to give the market the benefit of the doubt and assume that we will see new highs at some point. And despite the media talking about, oh, it's been so bad so far this year, remember that monthly chart. Really doesn't look that bad. So that's what we've got for you today. I hope you can find something profitable to get yourself involved with. Thanks for checking in to see how we're looking at things.